Hello traders and welcome back. Today we'll be diving deeply into the Nasdaq and the overall SPY to determine the current market conditions and how this could be ultimately detrimental or beneficial to the current market participants. So let's get started. Now let's get into the best part. Let's analyze the overall market on a daily chart. As we see here, we have failed a key level of support, which has been the 50 EMA. This shows that collectively the sellers are in control of the market and the buyers are pretty much zero to non-existent. But if we plot an anchored VWAP from the beginning of the trading session for the year of 2024, we will see something absolutely phenomenal. And if we just plot it towards January 2nd of 2024, plot that, we found buyers exactly at that level. So basically, the average long from the year 2024 entered the market at 467.36, right? And that is where we found the recent rally that we have seen, right? All this positive news. But if we plot the anchored VWAP or get the average price in which the shorts enter the market from this high, we see that we came into that resistance and rejected it. So the sellers are also present. Now, what we see here is that the sellers are still present. There's going to be more downside if the buyers fail to hold the $467 level. We will possibly achieve 447 on the Nasdaq, which is more than a 15% decline if the buyers fail to hold that level. On the contrary, though, if the buyers came in aggressively and we managed to get above that level, making the shorts lose money from that position, then we will slowly start to see the 50 EMA curl upwards over time, and this area here will show us that the buyers are going to be in control and we can possibly go and test the highs of 540, right? This could be the balance that the market has been wishing for, right? It all depends on the news and the current decisions of the new administration. We can also kind of gauge the potential upside move using Fibonacci retracements. We have seen a sharp decline and then a steady hold here, so we can plot a Fibonacci retracement from that point and see where it gets overextended, and we can possibly achieve that $583 level, reaching all-time highs, right? So this shows that not only if the buyers hold that level of 467, we will see more upside, but if they fail to hold that level, we will see the continued downside towards 447. And we can see this sentiment of fear and bearishness is seen with gold reaching all-time highs. It just shows how much investors are willing to sell equities and put this in towards safe haven assets, which is considered gold. This is very different from the triple Q. We are above the 50 and we are respecting, we haven't even touched it once. That shows how strong the demand has been for gold in the recent, ever since this high that we broke of approximately, January, pretty much the new entry of the administration. So it's very important keys to look out for. Also, Bitcoin has been following the Nasdaq. We also saw this, quick little bounce on Bitcoin, right, which we saw with the Nasdaq overall triple Q. We also saw that. But if the buyers as well, they fail to hold that, the overall market sentiment across Bitcoin and the Nasdaq will be bearish, and we'll see that more downside continuation basically in the market. So what are the key takeaways that you should be taking out of this? Well, the market has always been complex, and in these volatile conditions, it is very essential to stay informed because we have to be, aware of all these policy changes, any economic data and geopolitical events. Number two, we have to use technical analysis. We have to let aside all the news, all whether it's negative or positive, and look at the actual data and what is the chart telling us, what is a price action telling us, right? The market doesn't care what we think, but it doesn't care what we think about individually, but collectively. That's where we can build the thesis and just follow the price action, right? And number 3, which is the most important during these times, is to manage the risk. You have to employ the appropriate position sizing and the stop loss orders to protect against these adverse moves. So, overall, navigating the current market conditions requires the vigilance and adaptability. By understanding the factors influencing the Nasdaq and the overall market, we can make more informed trading decisions. Now, if you want more daily market insights and detailed trade setups, subscribe to the Uplift Markets newsletter. It's completely free and delivers actionable information straight to your inbox. If you found this analysis helpful, please like the video and subscribe to our channel for more in-depth market breakdowns. Share your thoughts and questions in the comments below, and as always, we value your engagement and keep your risk on.